Central Bank Digital Currency Explained. If you are associated with the finance field, you must have heard the word CBDC, Central Bank Digital Currencies. What is CBDC? How can it change the banking department? Central Bank Digital Currencies, CBDCs, have significant potential, and more central banks are exploring their possibilities for adopting a CBDC strategy. There are numerous obstacles and factors to consider. Hello 101 community! Welcome back to our YouTube channel. In this video, our topic is Central Bank Digital Currency. But before we begin, if you're new here, make sure to subscribe to our channel and turn on notifications to never miss any updates. Globally, central banks are associated with several significant duties. The first, and possibly most obvious job, is the creation of money. Central banks produce money, which individuals, households, and corporations subsequently use to conduct transactions and track where money is being spent. Additionally, central banks are responsible for ensuring the stability of the financial systems in their respective economies. To do this, they must continuously monitor lending standards throughout the economy and guarantee that credit is available when needed. They also serve as the government and commercial banks' last resort lenders in that situation. Therefore, the central bank can act as the government's lender of the last choice when there is no other option or avenue for the government to obtain the funds it needs. One of the central bank's main functions is to monitor economic data, and economists use this role to determine what the leading expert on the subject will have to say. For instance, the Bank of England publishes its quarterly inflation report, which includes commentary on current macroeconomic trends, as well as other information on GDP, growth forecasts, and inflation forecasts. The Federal Reserve, the central bank of the United States, also does this by using a dot plot, or an economic prediction chart with forward-looking dots, to depict where the Federal Reserve anticipates interest rates will go. And that brings us to the final duty of central banks everywhere, which is to formulate monetary policy. Setting interest rates is the most important tool in the arsenal of monetary policy's many separate instruments. Lower interest rates represent easier access to credit for consumers, corporations, and any other sector of the economy that requires a loan. Higher interest rates have the opposite effect, making credit more expensive and difficult to get. When economic circumstances are harsh and there is slower economic growth, central banks are responsible for reducing interest rates to ensure better access to credit in the economy. Central bank digital currencies. Although there is still a long way to go before a central bank digital currency becomes a reality in the United States, different segments of the financial services sector's perspectives on the prospect of a Federal Reserve digital dollar have started to merge. A majority of those in the traditional banking and credit union sectors appear to view an American CBDC as a threat, even an existential one. A CBDC, on the other hand, is viewed by fintech as a chance to increase involvement in what, in theory, could become a significant component of the payments mainstream. Payment institutions like Visa and MasterCard have also commented, obviously attempting to preserve a place for businesses like their own in any system where a digital currency becomes a reality in the future. The Treasury Department and the Department of Commerce have been actively involved in CBDC development, though the Federal Reserve is currently leading the way in this area. This is especially true since the Biden administration issued an executive order on digital assets that included CBDC development. Three main fronts make up the future of a digital currency issued by the U.S. Central Bank. First, there is the policy discussion surrounding its necessity, purpose, and potential form. Second, it is exceedingly difficult to implement a completely new kind of currency technologically. Third, since nothing occurs in a vacuum, the impact on the rest of the banking and payment systems is a topic of dispute that is far from being limited to academia. It's interesting to note that while it was one of the reasons more banks started to consider cryptocurrency, the MetaNovi digital wallet will be discontinued in September 2022. Central bank digital currencies, CBDCs' potential to be the most pervasive innovation in the digital and payments area affects all participants in the global financial services business. A central bank digital currency is both innovative in the way money is issued and in the foundation upon which payments can be made. A CBDC is a digital payment instrument that is a direct obligation of the central bank and is valued in the national unit of account. It serves as a medium of exchange, a store of value, and a unit of account, and is the official tender issued by the central bank in digital form. It has the same value as fiat money and may be exchanged for fiat currency. A central bank develops CBDCs tailored to each nation's distinct policy goals and motives. For instance, CBDCs might be utilized in government payments to more promptly and directly deliver digital cash to individuals in need. By extending their reach to underbanked or unbanked communities, through innovative payment methods and more easily available financial services, CBDCs may assist in addressing financial inclusion needs. CBDCs may increase a central bank's arsenal of resources for enacting monetary policy and keeping an eye on economic activity. To guarantee that residents will have access to money both online and offline, CBDCs can also be kept inside of people's digital wallets. Given the variety of digital tools available for managing all parts of our financial lives, the appeal of government-backed digital cash may appear hazy to many. CBDCs can be used for several purposes, whether retail, wholesale, or general, despite the fact that there is no one-size-fits-all technology for payments and banking. If you liked the video so far, press the like button and subscribe to the channel. Also, if you want to develop yourself financially and want to take your future into your own hands, check the links in the video description. You can also support the channel by visiting our merch shop and buying one of our products. The link is also in the description. Let's continue with the video. How CBDCs will impact the banking industry. Leading international agencies like the BIS and the International Monetary Fund believe that CBDCs can improve financial services speed, accessibility, and cost-effectiveness. It has some advantages because it is a digital version of a country's legal tender. To save the costs of printing and storing cash, a retail CBDC can be issued straight to smartphone wallets, especially for individuals without access to private banking services. A CBDC is being tested or considered in more than 80 nations worldwide. The reports follow research that the BIS released showing how CBDCs could lower costs and expedite cross-border transactions. The U.S. Federal Reserve intends to publish a study on CBDCs, and the European Central Bank, ECB, is preparing for a 24-month investigation into the digital euro. China is moving forward with its testing of a digital yuan in the meanwhile. The future structure of the financial system, a CBDC's architecture, and the degree of user acceptance are the three primary uncertainties that the BIS report on the consequences of a CBDC on financial stability stated. The paper claims that bank funding, lending, and resilience, as well as the uptake or pace of adoption of a CBDC, all affect the threats to financial stability. The paper warns that if adoption rates are too high, the current banking and financial systems may become unbalanced. The main worry is that using any CBDC would force people to switch their money from bank accounts to digital currencies. Banks can't create loans that bring in money if they don't have the finances to receive bank deposits. If CBDCs quickly take the place of bank deposits, banks may be less willing to make loans, which could cause instability in the financial system. The report claims that the transition's repercussions would be controllable, provided it proceeds gradually and gives banks ample time to adapt. Although slowing down the pace of CBDC adoption is important for maintaining financial stability, this does not mean that CBDCs shouldn't be embraced and utilized widely. Driving CBDC acceptance is essential for achieving the objectives of public policy set forth by the central bank, according to the study on user demands and adoption included with it. The advantages of holding money directly issued to them by the central bank, such as the certainty that a transaction is complete without risk of reverse, settlement finality, the ease with which assets can be converted to cash, liquidity, and the trust users can place in their central bank are among the unmet user needs according to the report. Integrity. The report stated that while central banks would be the only organizations qualified to issue and redeem a CBDC, any ecosystem for CBDCs would require a core ledger, a group of financial accounts, with accompanying infrastructure and regulations. It went on to say that the central bank will ultimately oversee or operate the core ledger in addition to developing the CBDC system. However, central banks aren't used to providing front-end clients or daily financial services, unlike commercial banks. Therefore, if a CBDC is run completely by a central bank, the bank must create a user interface from scratch. That's all for today's video. I hope you enjoyed it. If you want to see more videos like this, subscribe to our channel and click on the bell icon so you will be notified of every update. Also, don't forget to check the links in the video description. And while you're here, I'm sure you want to continue on the path of financial education. Click to watch the video appearing on your screen right now. I will see you there. Take care and stay tuned.